Afternoon, everyone. Can you guys hear me? Excellent, excellent. Welcome to our webinar, inaugural webinar. My name is Raman Bhalla. I'm the president of SIPBN. This is our first webinar in the series of in this topic, and followed by a number of other webinars as well. Just a little bit about Sydney Investors, Professionals and Business Networking Group as a platform. We are a premium platform. The objective of the platform is to provide an opportunity to the businesses, to the investors to link up with the business opportunities through networking, through webinars, through sponsorships, through membership services. The idea of SIPBN is to assist businesses and entrepreneurs to scale up. So we operate in both profit sectors and not-for-profit sectors. So that's the idea of Sydney Investors Business Professional Group. In this webinar, obviously we are joined by two prominent panelists. Firstly, we have David Plank, who's the head of Australian economics. David is the head of Australian economics team for INZ. And prior to joining INZ, David was head of Deutsche Bank's macro research and strategy on the fixed income side, as well as David worked with New Zealand Treasury. So welcome on the webinar, David.
Afternoon, everyone.
And then we have Dianne Tipping, who's with us. Dianne is the chair of Export Council of Australia and managing director of Hexagon International. Dianne has a number of experience in international trade and a senior leader with a proven track record in the trade community. So Dianne is involved in a number of public and private organizations in a senior capacity, including board members and other advisory role. So welcome to our panelists. So same time, I would like to thank all our audience. We have a very, very good, engaging audience on this room. I can already see we have a very good audience on board today. My suggestion is to please send us questions, use the chat room. We want this session to be live, interactive. Feel free to ask some tough questions from our panelists. David, feel free to, or Dianne, feel free to chip in. So we are looking forward to some good information from everyone, and so that we can share and make some informed decisions. So I would like to start firstly with David to get some understanding what's happening around in this economic world, Australian economy or global. And obviously we are going through some interesting patches. A lot of lockdowns due to COVID. And let's hear from David. Welcome, David, on board. Yeah, please.
Thanks, Raman. Afternoon, everyone. Yes, job of an economist to try and predict what's happening when in the midst of COVID pandemics is not easy, though it gives you a great deal of freedom in a way, because nobody is too critical if you get things wrong, because you have to make some assumptions about what's going to happen. So if we'd been giving this speech a couple of months ago, we would have been pretty optimistic. The economy, we were thinking was going to grow kind of 4.5% this year as it recovers from last year's lockdowns, and then that would continue into, though at a slower rate, into next year and the year after. Of course, we've had to recalibrate things a bit since the Sydney lockdown and those we've seen in, now 3 other states. And now it looks like almost inevitably that GDP will be negative in Q3. That happens. What happens when you shut the largest state in Australia for several months at least, and probably most of the quarter, and also have stoppages in other states. So GDP mathematically will be negative. And then the real issue then is, I think, in terms of how lasting the impact of that is, or how deeply scarred the economy is, it's really about the labour market. If you close things down, then of course you get negative GDP. But GDP in a way can be a very artificial way of measuring things. If you have an earthquake or a flood and you have to rebuild lost buildings and lost bridges and lost roads, GDP goes up, but nobody would argue that you're any better off. So in some ways, the focus shouldn't be on, in many ways, the focus shouldn't be on GDP. It should really be on the labour market, because it's what happens to employment and therefore incomes that will be critical about our ability to rebound. And on that question, we're actually quite optimistic. And I think things will be very different from what they were in March, April last year. And we've already seen that. If you think back to March, April last year, then the professional services firms responded to that shock by laying staff off and by slashing, by actually cutting people's pay. The professional services firms at the moment are in the midst of one of their biggest hiring sprees ever. They're raising pay. I haven't seen any indications that they're going to slow that down. In fact, I've seen plenty of indications and anecdotal evidence that there's a competition for talent going on. So again, just that's one anecdote that shows things are very, very different to what they were last year. Another more concrete piece of information is ANZ job ads, which we published on Monday for July. And so in July, for that entire month, Sydney was, Greater Sydney was shut down. And for part of that period, we also had lockdowns in Melbourne and Adelaide. Job ads didn't fall. Job ads were effectively flat after 40 months of increase, which is the longest run of increases we've seen. And job ads are at a level that's well above where they were prior to the pandemic. In March and April last year, job ads fell 60%. So basically, people haven't stopped advertising for workers. And if we look at other indicators, there's just everywhere we see skill shortages. But that doesn't mean that some people, unfortunately, won't lose their jobs, and inevitably there'll be some firms and some employers that have to cut back during the lockdown. But I do think we're going to see a very, very different reaction. And what we'll see, rather than lots of people lose jobs, I mean, there will be job losses. But rather than the sort of scale of job losses we saw last year, I think what we'll see is hours work fall sharply, and we'll see employers hoarding labour, holding on to workers, knowing that when the lockdown ends, spending will return, the economy will bounce back, and if they let workers go, they'll struggle to find them again. So we think there'll be a lot of labour hoarding, and we've actually even though we were forecasting a negative GDP in Q3, we're forecasting that the unemployment rate will be lower at the end of this year than it is now. Interestingly, the RBA yesterday, when they published their statement, and we'll find out their detailed forecasts on Friday, but in that statement, they basically said the same thing. They think that the fallout that there will be job losses, unfortunately, and they forecast they've got a small uptick in unemployment over the next few months, as do we actually, but then falling later in the year.
It's freezing, David. Are you there?
And then, of course, coming out of that lockdown, Melbourne boomed.
Yeah.
The other thing we know as well, if we look at some of ANZ's spending data, where we get data on what people that have ANZ cards or use ANZ terminals, what spending. Most recent Melbourne lockdown, even last weekend, when there were still mask requirements and presumably people were still a bit nervous, spending was 50% higher than it was going into the lockdown. So people in Melbourne came out and actually spent more. So they caught up. So again, this really strong evidence that when the lockdown eases, you'll see spending rebound. And I'm more confident about that now that we have considerable fiscal support. I mean, the Commonwealth government is obviously with initially a bit of reluctance and been quite cautious, and now it's seen the scale of the lockdown has dramatically increased its support. There are more people getting the emergency payment than we're getting job seeker, and more people qualifying for it. Casual workers qualify, non-residents qualify, and it's not taxed, so it's actually more generous. Yes, there are. It's not nationwide. Those parts of the country that don't need it aren't getting it, but for those people that need it, it's actually more generous than it was last year. And obviously, there's assistance for firms and conditional on them not laying off workers. So I think that fiscal support, again, will be very important. And again, the RBA in their statement yesterday highlighted that and said that's really significant and important. And if things get worse, I think we'll see more fiscal support. So we're relatively confident that when we get to the end of this lockdown, things will rebound. The biggest unknown is when do we get to the end of the lockdown. So in our forecast, we've assumed it lasts all the way until September, so 4 weeks longer than the state government's assumed. And then we've got it easing off slowly. It won't ease off quickly. It may be that we never suppress COVID again, that the Delta strain is non-suppressible, and that eventually it'll be the vaccine rates that determine the extent of lockdown, and we have to live with it. But obviously there's considerable uncertainty, and we'll just have to see what happens. But what we've seen is that through last year and through this year and other lockdowns is that, and as the RBA has also said, people adjust, policy responds, and things bounce back. And so that makes me reasonably confident about the outlook. Though there will unfortunately be, as I said, some firms and some businesses that aren't able to withstand this, and so I wouldn't downplay those effects. But I'm still relatively confident about the outlook, given the amount of stimulus, given where the global economy is, given where the Aussie dollar is at very low levels, given that commodity prices are at record highs. So that combination means that there's an enormous amount of stimulus going into the economy. And once we remove, the forced lockdowns that mean people are restricted in what they do, I think things will rebound quite quickly. And then next year and the year after will be quite positive. Eventually that means interest rates will go up. Eventually that means that the RBA will hike rates, but we don't think that's for a couple of years. That low interest rate environment, of course, underpins the property market. So we've seen, obviously, over the last year, a very strong property market after the initial shock of the pandemic, when there was an enormous amount of uncertainty. When we published forecasts in March of last year that said property prices might fall 20%, but that was based on, I think 10 actually, we had 10%. But that was based on sort of expectations that 30 to 40,000 Australians might die, which is what the medical people were telling us. So we thought that the economic hit would be enormous. Of course, that the medical people, thankfully, were very, very wrong. And as that became evident, we saw the property market turn around based on low rates. We, at the beginning of this year, forecast that house prices across Australia would rise something like 20%, a bit less than that, but over the course of this year. That's broadly right. By state, it's a little bit different. We do think that there'll be a slowdown in house price gains next year. Why? Well, interest rates have gone up a bit. Fixed rates are no longer quite as low as they were, for instance. And the regulator is telling the banks to tighten up on their criteria. So we are seeing a tightening of credit at the margins. We're still reasonably optimistic next year. We've still got property prices going up, but less than this year. And in many ways, I think that would be a good thing if we had another year of 20% plus. I don't think that would be good for lots of people. And I think the regulator would step in if that happened, and step in quite aggressively. But we're still pretty optimistic about property through the course of the next couple of years. And it's only when I think interest rates start to meaningfully rise that the outlook for property will become a bit more difficult. And that'll be, in our view, the second half of 2023, which is a bit earlier than the RBA signalling. In terms of commercial property, the big unknown there has been around office. If you look outside office into industrial property, anything to do with logistics, they've all been extremely strong, helped, of course, both by low interest rates, but also the shift to online shopping. The big challenge has been in the retail space. I don't think that's changed. The retail space has been challenged for a number of years. In fact, we do a survey with the Property Council of Australia, and people are actually more optimistic about retail at the moment than they have been for quite some time, because retail has rebounded from the lockdowns. But retail obviously is structurally challenged by online, and that won't change. The real question mark has been over office and whether people will return or not, and what that means. I'm not an expert in that sector. My view, though, is that people will ultimately return to the office, maybe in different ways, office space being utilised differently from what it was before. But I don't think we'll all be working from home permanently. Personally, I don't want to work from home every day. And hybrid, which lots of sort of CBD type firms are going to, they require lots of office space. And if COVID is with us permanently, which is probably the right assumption, and then we'll be looking, learning to live with COVID like we live with the flu, getting vaccinated every year, but also needing to be more socially distant at work than we're used to, then hot desking is gone potentially. And so office space will have to change, and potentially you need more space per worker than you did before. So office, there has been more uncertainty around office than any other area of property over the last 12 months. And that uncertainty probably continues for a few years. But again, low interest rates, I think, underpin at least good quality office space in the cities. So I'll stop there. I don't know, Raman, whether you wanted to ask any questions now or whether you just wanted to pass.
Yes, I do. I do have some questions for you, David. I ask my audience to feel free to send us questions. First question, even in my firm, we are trying to recruit a couple of accountants. Unfortunately, it's taking a lot longer than we expected. Just reiterating your point on the shortage of skilled staff. So, do you know what's happening? All this pandemic with international travel stopping, do you see any impact on Australian population and its impact on economy?
Well, sure, no. So the population, we've had effectively zero population, not quite, but we've had the lowest population growth in the last year that we've had since Federation, I think. Arguably, I would argue that our population growth in the years leading up to the pandemic was too high. I think that was probably counterproductive. I think, I'm not anti-immigration, but from me as an immigrant to be anti-immigration, but you need to make sure that the numbers coming in are able to be absorbed, given infrastructure and so on. And people say, just build more infrastructure, but there are capacity constraints and so on. So I do think there is evidence to suggest that if you run immigration at too high a level, it can lead to poor outcomes. What I think will happen, and I think there's probably greater acceptance of that amongst a number of the policy arms. What I think is likely to happen is that when immigration comes back, it certainly won't be above the levels it was pre-pandemic. It may take some time to build back up towards those levels, and it may not get back to those levels. What that means is that if you thought the population was going to be here in 5 years' time or 10 years' time, even with immigration, it's going to be quite a bit less. So, there's in a sense, a permanent change to the level of population. Does that matter? Well, it doesn't matter per capita. There's very little evidence to suggest that immigration boosts per capita growth all that much. There's some evidence that maybe very marginally it adds to per capita growth. But certainly over the last decade or so, Australia's performance, when we say we're one of the strongest growing economies in the world, we were, but only because we were adding people. If you looked at GDP per capita, which is what really matters, what you should be really focusing on is GDP per capita. In fact, Australia was a laggard. We were lagging Japan. We were lagging most countries in Europe. We were one of the worst performers, along with New Zealand, actually, and Canada. So the countries with high immigration were actually using high immigration to disguise very poor productivity improvement. So hopefully the focus now, amongst policy makers will be on productivity. And I think that's a better focus than simply thinking we should go back to really high levels of immigration. Immigration will come back, and relative to lots of other countries, Australia will run a very high level of immigration, which I think is appropriate. We're a young country, we need the skills, we've got lots of space. But hopefully there'll be more of a focus on productivity and improving living standards than simply getting bigger.
That reflects actually to our favorite question which everyone asks, because property markets, particularly residential property, is very much a function of demand and supply, as well as the prices being affected by the lower interest rate. If there's a lower level of immigration, because particularly Western Sydney, that's where we are sitting up. I'm sitting at the moment, that's where my office is, which is an engine of Australia's economic growth. So how do you see the impact of a lower immigration on residential or property markets? Because property markets being the driver of economic growth, the job growth, and that reflects into political messaging as well. So it could have some longer term impact from policy perspective.
Well, as I said, if you focus on per capita growth, which is what's really important, the focus should be on getting better, not bigger. Countries with low population growth have done much better than Australia. So there's really no evidence to suggest that we've benefited from high immigration. What it does do, in a per capita sense, the various studies that have been done suggest that if it does have an impact, it's very, very small in per capita terms. It certainly makes but I don't think the objective of policy should be to get bigger. It should be to get better. So I'm not too worried about that. Australia will not go back to zero immigration. When borders reopen, Australia will go back to having a relatively high level of immigration. Certainly by global standards, Australia had the fastest growing population in the developed world prior to the pandemic. Maybe we won't go back to that level, but we'll certainly have very strong migrant inflows, very strong population growth relative to everybody else. So I think this is a relatively temporary thing, albeit lasting longer than any of us hoped it would, and may last a year or two longer. But at the moment, what's happened, of course, is that lower interest rates have simply overwhelmed that. So if we'd had the population shock, but we hadn't had the fall in interest rates, then property prices might have gone down. Yeah. What we had the population shock, but we had an even bigger shock with interest rates, and that's just completely overwhelmed any effect from population. What probably happens is that interest rates really don't start to go up in a meaningful sense until borders reopen, because the RBA has made it quite clear it wants to see what happens to the labour market once borders reopen. And so what we'll probably get in the next stage of the cycle is, as interest rates start to rise, and they probably only rise quite gradually, we start to see a return of immigration, and so we get that natural increase in demand. So I don't think there'll be a sort of a, everybody knows that for the next couple of years, population growth is going to be low. I don't think people are going to wake up in 6 months' time and go, oh my God, there's less people than we thought. That's already happened.
Yeah. The other question fascinates people. In my profession, I've been asked quite a bit. Economies were down now, and stock markets. If you look at globally, Australia stock markets are booming, like record breaking. Every day you see new record. But if you look at the ground reality, we are in recession. Economy is going down. There's unemployment figures as well. How would you explain this? Is there any correlation, or how is it going to reflect on the stock markets?
So I'm not an equity analyst, and I look at interest rates more than equity prices. And my experience with equities, I remember 2008 when credit markets were blowing up ahead of the global financial crisis, and anybody associated with credit markets was thinking this is really bad. Equity markets were still going up. So I don't really see equity markets as necessarily providing much of a lead on what's happening in the future. But what I do think is equity markets have been responding to is low interest rates. The world's awash with liquidity. Lots of money needs to be put in it somewhere. If you put it into the bank, you get zero. So you look for an alternative. So that's boosted equity prices and property prices. If interest rates stay at zero forever, then the price of, technically speaking, if interest rates are zero forever, then the price of an equity is infinity, because the stream of dividends is discounted at zero. Now, that's not going to happen, of course, but if interest rates stay exceptionally low for a very, very long period of time, then you can argue that equities and other real assets that have yield, that earn income, are not expensive. They may not be cheap anymore, but they're certainly not necessarily expensive. If interest rates go up, of course, if interest rates went up sharply, then the picture might change quite quickly.
Yeah, if you look at the bond market, the bond yields have been falling. If you look at US 10 years rate and stuff, is historically almost at the historical levels. So effectively, the discount factor is low, as you mentioned. If you look at the recent tech deals, just yesterday or day before yesterday, Afterpay was bought phenomenal pricing, Australian tech company. So how do you think the interest rates or the discount factors are playing in? Is there any impact on this factor?
Oh yeah, I think interest rates are been the key driver of the equity price boom. So I think tech companies. Again, I'm not an expert in equities, but so tech companies always get priced in a different way from traditional companies, and we see sometimes that's a bad thing, as during the tech wreck back in the early 2000s, a bit different now. I mean, the companies that are getting priced actually do generally make money and have positive earnings, not all of them. But yeah, it's interest rates. If you think interest rates is going to stay low, then and you've got cash, then you pay enormous multiples, particularly for things where you think the growth, first mover advantage, and all that, and a lot of the tech companies have that. Is the real issue for those companies? I think that the developing question over the next few years is going to be what the regulators do in terms of anti-competitiveness. So you're seeing the US grapple with that now in terms of the dominance of the tech companies. And so I think that's going to be one of the big questions across lots of countries in the tech area, is what they do about the dominance of companies that have networking advantages, where the bigger you get, the better you get. Whereas usually in economics, the counter was the opposite, that as you got bigger, economies of scale and so on got harder to find, and so there was a disadvantage to being too large. That's reversed with tech companies, and so that's going to be a real challenge, I think, over the next.
Yeah, that's what I find it quite fascinating personally. I would like to ask our viewers or audience to ask any questions. Warren Buffett, the master of the game, he is never a fan of big acquisition. He always said this is a factor of pride, and managers make acquisitions for different reasons. But if you look at the tech sector, every tech company, like Google's been acquiring 100 companies a year. All the big companies are acquiring around the globe at a phenomenal scale. That's how they've been so dominant in the market space or economy. So personally, or out from our group perspective, it'll be quite interesting to see how post-pandemic, when international movement is still limited, how the tech companies, mind you, China has just cracked down heavily on tech sector and online education sector. I have some friends in that market. They are just not touching tech companies and online education companies. So that'll be very fascinating space from how US companies and Australian tech companies play out in this game.
Yeah. So, Raman, there's a couple of questions on chat that I might briefly touch on, and then I'll pass over to Dianne. So just there's one question here about respect to the recent intergenerational report. As it so happened, when I was in the New Zealand Treasury a long time ago now, I actually was in charge of the area that did New Zealand's first intergenerational report.
Sure.
And so we did a lot of the modelling, and those reports, they're useful. I mean, they show what some of the long-term trends could be, but they're very sensitive to the assumptions you make. I don't think Australia's really got any real issues in terms of sustainability of an ageing population and so on. I think Australia's in a really good place and lots of policy options, but there are challenges as the population ages. In terms of zero migration is not sustainable, well, eventually, especially with that ageing population and skill shortage, well, eventually the world's population is going to stop growing. On current trends, global population growth will be zero, if not negative, shortly. Actually, there's lots of countries in the world that are doing quite well with negative population growth. Japan, for instance, is doing better than us in per capita terms, even though its population is shrinking. And so I think, I don't think that zero migration is unsustainable. Actually, it's not something I'd aim for. I think there's lots of benefits from immigration, but I think that we overplay the benefits of high population growth.
David, could I just pop in there on that? I agree with you. I have read a little bit of the intergenerational report, and I also look at other things in regards to that. I think we need to, as a country, have a better visa system so we can have a better skills migration, if you like, not migration, but skills workers. And I think if we look at our competitiveness in the international global market, we're not doing well. We've actually slipped four numbers in the last year, so from 18 down to 22. So having high population or growing our population is not helping us at the moment in competitiveness at all. Major companies are getting stronger, and the power of the market force is playing against us in a lot of those areas. Yeah. Sorry to interrupt you. I just thought I'd throw that in.
No, that's a good point. No, good timing, Dianne. I'm actually, I think, good place for me to finish, Raman, and perhaps pass over to Dianne.
Yeah, that's okay. Do we have any other questions from the audience? Before we ask Dianne for her opinion. I just got one more burning question for you, David. Just how's about the foreign direct investment happening in Australia? We saw the tightening of FIRB regime due to certain political reasons, and then pandemic happened. So how do you see Australian growth perspective in this area?
So, Australia's still got this hang up that we need foreign direct investment because we need the money because we had this long experience of running large current account deficits, which by definition mean you're not saving enough to fund your investment. Australia doesn't have that problem anymore. In fact, Australia is now a net exporter of capital. We're running a current account surplus, which means we're saving more than we're investing, and we're investing a lot. So we're just making a lot on our investments, actually. Now, we don't think that'll be sustained, so we do think we'll probably go back into a small deficit. But the old days where Australia needed to import lots of foreign capital have gone, and I think gone permanently. And we're going to be much more closer to zero, if you like. So it's not about the quantum of foreign capital coming in, which it used to be. It's about the quality. And so I think around that, it's important that you have really robust procedures and standards and competition rules and national security rules and so on. And we're simply not in a position where we need foreign capital. As I said, we're now a net exporter of capital.
Wow, that's fantastic.
And that's a very different environment from what we used to. So what we should be looking for when we're gauging the importance of foreign investment is it bringing in knowledge and skills and things that we don't have here. And so when we think about, I'm not an expert on Afterpay, but with the Afterpay deal, is that kind of a good tie-up that actually gives Australia access to, from a national point of view, that gives good access to ideas and all sorts of other things. It's not about the money. We don't need the money anymore. So that's very different to say 20 years ago.
Okay, thank you, David. Now let's have Dianne give us some overview on the Australian exports market. What's happening in the exports market, Dianne? If you could enlighten us. Yeah.
Thank you. I thought I'd talk firstly about the global perspective and then why, looking at Australia and why we should then look at export if we're not exporting or expand our export opportunities. And I will start off by saying, yes, we should export and we should expand our global opportunities. The prospects for a quick recovery in world trade have improved. As merchandise trade has expanded more rapidly than expected in the second half of last year. And according to new estimates from the WTO, the volume of world merchandise trade is expected to increase by 8% this year. Now, these figures are not taking into account what's happening in America, and they're going into a third wave, if you like. Indonesia's having a very difficult situation. India's coming out of their second wave, which wasn't good. But I think from David's comments as well, we do know that a lot of people have continued to succeed during COVID, and a lot of trade is increased. There's a lot of global e-commerce trade happening. There's a lot of materials, work materials, building materials. Those sorts of things are really booming at the moment because countries want to rebuild their structure, not their structures. They want to build. They want to continue to grow and develop what they've haven't in the last year. We need to think about what can still happen with COVID. I think the international arena is very positive in the way of the future for global activities. The volume of services trade, so I was talking about commodity trade, but if I talk about services trade, it's expected to more than double by, and in fact, I would say probably even quadruple by 2030. We haven't got figures at the moment, don't include international travel or a lot of that with other countries as well, and they don't include education and so forth, inbound education in a lot of countries, and tourism. So, there's a lot of scope for services to really increase, and when they come back online, and they will eventually, that will make things a lot easier and a lot better for all countries. In Australia, we do rely very much on three very top commodity lines, and that's our minerals and energy. And as David said, we are in a very positive situation with our minerals and energy at the moment and our investments overseas and so forth. We my concern is that we can't think that will last forever. We have to still build up our capabilities and capacities in other areas. Our second largest commodity is agriculture, and that is a product that everyone wants to buy, but I'll come back to an issue about that in a moment. And the third one is services that I just mentioned. And although our services is strong, our inbound tourism and our education is not working at all at the moment. So we hope that when that comes back online, we'll bounce back as well as, and it may be hard, particularly in the education area, because a lot of those students in other countries will be able to go to other countries that are open now, where we're not. But we have to be positive and think that a lot of that could be done online as well at the moment. I was interested, David, in your comment about online education institutions not doing so well and so forth, but we can come back to that later. However, there's a really big problem in all of this at the moment, and it's a global shipping industry crisis because so much is happening in the world and there's such a rise in purchasing power and money to be spent, which is really unusual during a pandemic in my mind, but the global shipping industry is totally in a state of flux, and there's unprecedented congestion in every port around the world. There's delays, unfeasible freight rates, and causing chaos beyond consideration, beyond even thoughts that we thought could ever happen. The entire sector is fraught with uncertainty, with lockdowns and border closures bringing national economies to a grinding halt. Shipping is not working. It is just not working. And if we look at, freight rates of $20,000 for a container from China to the USA, you can understand where it would have been probably $2,000, and I'm talking US dollars, but 2 years ago. It's a crisis. It really is a crisis. So everything from large-scale shipping line contracts down to the price of a single freight container is changing minute by minute. This, of course, applies also to the air freight industry, and I know I don't need to remind everyone, but we don't have a lot of planes coming into Australia at the moment, and the little ones, or the small number that we do have, can only take so much cargo back out, and we're not allowing other planes in. We're not allowing people to come in, and you can imagine that the airlines are not going to bring an empty plane in, and even if they did bring cargo in, it's just not feasible for them to keep bringing planes in and taking cargo back out. And if they do that, which some airlines are servicing Australia, so we have Singapore Airlines, Emirates, Qatar. There's quite a few servicing Australia, but they're not doing it on, 4 or 5 flights a day or 6 flights a day. They're doing 4 or 5 flights a week if we're lucky. And we've got a very big country. So if we're trying to get cargo out of WA or the east coast of Australia, it's very different to saying, okay, let's put it all on one plane. That doesn't work easily. So it's a major, major problem from Australia's perspective, and we are very much geographically challenged, even though I love being in Australia. We're a long way from the rest of the main routes in the world. So we have to be serviced. We are a feeder country virtually for air and sea, and that is really playing a very colossal or having a colossal impact on what's happening in Australia. I don't want to be negative with this, though. I think this is a challenge, and the Export Council and many other industry bodies are talking to government on ways that we can try and overcome this, or not overcome it. We'll never solve it until things get back to normal, but how we can lessen the load a little bit. Really, it's not going to happen, though. To get back to normality and whatever is normal in the future, I'm not sure. But to get back to expecting to get on a ship anytime you want, or expecting to get on an aircraft when you want for cargo, let alone a passenger, is not, is something that might be 2, 3, even 3.5, 4 years away in what we've expected in the past. So there are some major challenges. That doesn't mean that we shouldn't still be globally interactive. We shouldn't still be sending our product. Now, you might ask about some of our commodities, and I mentioned minerals and energy and agriculture. Not all of that cargo goes, on bulk ships, but the majority of that cargo, the iron ore, the coal, the large grain shipments, the large types of agricultural shipments, they go on bulk vessels, and thankfully they're not as affected as the containerised. I'm talking containerised cargo and air freight, which is the big problem at the moment. So I don't know if you'd like me to stop there. I would like to encourage people to consider exporting, and you'll ask me why when I'm talking about all these challenges, this is the time to plan. This is the time to think about what you may be able to do in the export market. This gives you the time and the resilience to build up a strategy and then put it in place when you're able to do something. I've got lots of thoughts on that. You know, the consumer base in the world is, or the number of people in the world is at least 7.5 billion, and there's only 25.5 million in Australia. So why wouldn't we think about exporting? It's you know, the market's not as big as we'd like in Australia. That doesn't mean, as David and I both agree, that we bring in more people and just have a bigger population. We have to do that strategically. We have to do it with good skills. We have to be able to make things in Australia. We have to be able to make things that we can sell overseas. We have to become a bit more self-reliant so that we can make things in Australia that don't require a lot of global supply chain, sort of issues that can disrupt us. Look at all the PPP stuff. We had to end up making a lot of it ourselves, which we did very successfully because we had to do it. We couldn't get it to Australia for us to use that equipment when we wanted. So I think we need to be more self-reliant, but we also need to sell globally. We need to have that global competitiveness. We need to have that global marketplace open to us, and we need to be able to put jobs into that. Currently, 1 in 5 jobs in Australia are related to export trade. Yeah. So, looking at the negative part of trade is not going to help us. We need to keep those jobs going. We need to keep the factories open, the farms open, all of those things happening. So I might just stop there for the moment and see if there's any questions anyone would like to ask me in particular.
Someone has asked this question. Could you...
Okay, mining and energy, you mentioned agriculture. Okay, well, the agricultural industry is really interesting at the moment. They've had a bumper crop in the last year, and the weather has been kind. In the years before, we've had the droughts, as you know, and it has been very kind. And that's one of the issues we've got in Australia, that because we have a bumper crop, getting it to overseas markets. When we make, and I'm sure everyone's heard this statistic before, we produce, and I'll say produce, not necessarily make, we produce enough food to feed about 75 million people, 75 to 80 million people. What did I say the population was? 25.5 million in Australia. There are not many options. We either stop producing and lose jobs and income in Australia, or we continue to get to overseas markets. We have a wonderful product. We're perceived as clean and green, although a lot of the world is still perceived that way now, is beginning to be perceived that way. We need to do agriculture. We need to. It's one of our heritage products, our heritage commodities, and we do really well with it. So, I really believe export needs to happen and it needs to continue. We just need to get through the next few years with all of the logistics issues and make sure we're still there at the end of the day and still competitive.
Yeah. I have a couple of questions for you, Dianne. Australia, as you said, is a smaller market as compared to global scale. Are there any sectors or non-traditional sectors, just for example, fashion or IT, would you suggest where the markets are good for the Australian talent?
I would suggest, I actually did a session a few weeks ago with the Australian Fashion Council, and it's a very strong international, fashion is very strong for Australia. And we do very, very well. And we looked at emerging markets, and we looked at South America as being, but I think this applies to a lot of consumer products, but as well as agriculture and other products. But Chile, Argentina, Brazil, they have a strong agricultural industry anyway. They have a strong mineral industry. In fact, Brazil is going to end up being a strong competitor for Australia in the iron ore industry when they get back to some sort of normality. But at the end of the day, we need to build up our other commodities, our other products, and that's manufacturing. That's food and beverage, not just machinery or anything like that. Consumer products, fashion, Fashion can be really, really very unique to Australia. We need to look at things to be competitive overseas, like, sustainability. Fashion sustainability is really booming around the world, and we need to think about how do we meet the goals of the sustainability goals, I should say, and provide product that meets those requirements. We need to be ahead of the game. We need to think that far ahead. We need to think of food and beverage that is not just normal sort of everyday food that I probably like, but thinking about what people are wanting now. They're wanting more plant-based. They're wanting more, gluten-free, those sorts of things. Health foods. Health foods are really booming, starting to boom in some of the South American countries. Looking at Turkey, looking at a lot of African countries getting quite developed in some of those countries, looking at the Middle East, and how we can build up that area of strength there. So, I like the fact that we think about our main markets, which are, the USA, Asia and Europe, and we have some really great free trade agreements in those areas, in those countries. But let's look at emerging markets. The prospects are still good there. They're still good.
Yeah, fantastic. Any questions from the audience? If you could.
Raman, there's a couple here that we didn't touch on. Maybe I'll leave one for Dianne about the UK. But there was one on the trend towards regional areas that's been going on now for quite a while. I think that's a permanent shift in terms of the ability for people to work remotely. I mean, that's not going to change. I suspect, though, what we've seen is, the initial burst, and when things sort of go back to normal, we won't see quite the same push that we've seen in the last 12 months, because there was that initial, surge as people realised that was suddenly an option. But I do think that, there's going to be, for a lot of people, that ability to work remotely changes things substantially. There's also a question about the banks in terms of their providing support. If lockdowns continue beyond the end of September. Look, I'm not that in that part of the bank, but obviously the approach taken by ANZ and all the banks has been to support those customers and homeowners and clients and so on that, but for COVID, have a very sustainable business or a very sustainable position. And so it's not in the interest of any banks to change that approach. There will, however, always be, unfortunately, some people for whom COVID and lockdowns has kind of accelerated perhaps something that was going to happen anyway. So there will always have to be, I think, some difficult conversations, but I think the banks are well positioned and want to make sure that those customers that have a good position and good businesses continue. It's not in the interest of any banks to change that.
Yeah, I have a question for Dianne. You mentioned about exploring foreign markets. I believe there's an interesting grant program from the Australian government perspective, export marketing grants, and I believe there's some changes coming through. If you could let us know.
Yes, certainly. Yes, certainly. So the traditional EMDG grant, or the Export Market Development Grant, was a grant paid by the government on marketing costs after you had actually paid marketing costs and actually had done the marketing. As of the 1st of July this year, and just to be sure so someone doesn't get panicky here, for the year 2020 to 2021, the traditional program is still in place. So one can still make a claim for any marketing costs. And that would be hard with the COVID in place, because I think very few people would have travelled this year. And marketing included airline tickets and visits overseas. But there still would have been marketing costs for virtual meetings and maybe doing up marketing material and videos and things like that. And maintaining a team overseas, that also has an ability to be claimed for if you're in that category. The new program, which commenced the 1st of July, will be you can claim the funds before you spend, but you have to put an application in. It opens on the 16th of August, the application system, and it's open till November. And I would suggest everyone that's interested in this goes to the Austrade website and looks up ENDG and looks at the very fine print. You put in an application. It's quite detailed, and Raman, this might be something that your team can help people with. I don't know, but they need to come up with a plan, and that's why although I would 100% say you need an export plan regardless of doing a grant or not, you do need to have an export plan for this process. You need to be able to spell out what you're going to be doing for the next year or 2 years or 3 years, depending on how long you want that grant for. There are different tiers as to whether you're a beginner exporter or an existing exporter, and whether you've claimed already over previous grant years. It is complex. I won't go into all the fine print now, but the Australian government does have that available grant there, and you can claim, depending on what tier you're in, up to a couple of $100,000, depending on what tier you're in advance now, which I think is great because it gives an exporter or a prospective exporter the opportunity to have some funds to do that marketing overseas. But you need to have a plan, and you need to submit on the application online.
Is there any minimum amount that they need to spend to avail this grant, Dianne?
There needs to be, you don't need to technically put an in-kind in, but you need to show that what you're doing as a business to get that money, if that makes sense. You can't just say, I want, $100,000 and I'm going to go and visit China and Asia or wherever. It needs to be a bit more specific, and it will cost me this, and this is what I'll do. It probably will be paid in milestones, and it needs to be clear about what those milestones would be. So there's quite a lot of literature. It's not as easy as just saying they're going to give you some money, but I do like the fact that an exporter or a would-be exporter can now plan what they want to do and not go overseas and spend money and come back and then put in a claim for funds, which they may or may not get, depending on how they've spent it.
I remember in the earlier days that there was a minimum amount of, you have to spend 15 grand or something too.
There is that minimum amount, yes. Yeah. And by the way, everyone, New Zealand doesn't count as an export market.
Yes, right. That's fair enough. All right.
Dianne, there's a question for you about how long do you think it will take for the shipping crisis to resolve itself?
Yes.
I think it's going to take minimum 2 or 3 years. We have, David, you'd probably enjoy this. I'm an exporter in my own right, and I had 5 containers worth of product to ship to Auckland on the 14th of May. This is how bad it is. None of it went together. It all went, so it was enough to fill 5 shipping containers. Mm-hmm. I just shipped the 5th one last weekend, the 30th, to Auckland. Now, that is a really close country, 2 or 3 day sailing. We normally have a really good system between Australia and New Zealand. To wait that long, 14th of May till the 30th of July to ship the 5th container, it's unheard of. It's just, that's how bad it is. It's really bad. And I can't see that shipping lines will be able to solve that problem. I can't see, it's happening everywhere around the world. In fact, the US government, has put out an executive order a couple of weeks ago. They've got similar problems. Every country has it. And there's just not enough ships in the world, or enough shipping capability in the world, if I can put it that way. I'm not suggesting that shipping lines are doing anything wrong, but it just seems it's not working really well. Not at all.
Just a couple of months ago, there was a crisis in Grand Suez, or 6 days, where the big container was stuck in that canal, and the whole world supply chains were disrupted.
Yeah, I mean, that has played a great part in this, but it's not the reason that we're in this position. It's just not. It's just there's so much cargo wanting to move around the world. ships are taking particular care on some routes, and other routes are suffering because of it. And I'll go back to Australia. I think Australia is in that position of where we're very, very nice, and we're an island, and I love Australia, but we're very much away from the main shipping routes. And for a ship to come to Australia to take cargo is probably not as profitable as it is going from China or Asia to Europe or the USA. I mean, if you think about it, we don't normally have ships that are much bigger than 6,000 containers at a time, or up 6,000 or 8,000 containers at a time. All of those ports, Singapore, Hong Kong, Sri Lanka, Colombo in Sri Lanka, the USA, they take ships that take 20,000 containers at a time. So you can see where the advantages are in other countries regarding the shipping process. But Australia's very badly impacted, but so is the rest of the world. It isn't just Australia.
So does it mean increase in Australian consumer prices, because Australia imports a lot of products from everywhere in the world?
I don't know. I mean, I didn't have anything to do with it, and there were a couple of comments that were a bit strange. But if anyone watched A Current Affair last week, there was a story on telling everyone to buy their Christmas presents now because they won't get them by Christmas coming in. That's. I mean, the thought of the story is probably quite right, but I think there were some comments there that were a bit outlandish. But
Raman, it hasn't flowed through to prices. Consumer prices yet. I think it's more squeezing margins of retailers and other people at the moment. That may change, of course, but these sorts of disruptions, even if they last for a period of a year or two, are temporary. So markets adjust. And markets adjust quite quickly. There was a story, stories a few months ago about what was happening to timber prices. What's happened since then is supply's adjusted and timber prices are collapsing. So markets do adjust and economies are dynamic, but there will be some pressure in some areas, and that's part of the at the moment. For instance, inflation in the US is above 5% in the year to the end of June, which is the highest it's been for decades. But a lot of that is seen as temporary due to supply disruption, and as those things work their way through, we should see a lot of reversal of that. And that's one of the big questions in markets at the moment, is how much of this supply disruption and other things that we're seeing that's impacting prices, how much of it will be temporary and how much of it will become more.
The problem in the export trade, David, as you probably be well aware, is that a lot of people have contracts with buyers overseas, and when the freight rates are going up from 1,000 to 4,000 or 5,000 for the same container that went, 4 months ago, where are they? What are they going to do? Do they have to, do they put their price up to adjust for the freight? Some of those margins are not that big, so
I appreciate it. Yeah,
it's difficult in that respect for exporters. I'm not talking about domestically. I agree with you totally. Domestically, it'll adjust. But the same applies, I suppose, for importers as well. Okay.
Yeah.
My son is coming.
Yeah, your son is coming. Yes.
My son.
All right. That's all right. Right. Yes. Mm-hmm. Yeah.
There's one other question on chat about the UK and what they're experiencing with their opening up, and what can Australia do from their experience. I mean, I think. And thinking about the next stage, the government's put forward a plan about opening up once our numbers of vaccinations get to X percentage. If you open up with vaccines, then you're going to get lots and lots and lots of cases. So the question then is not so much the number of cases, it's about the number of hospitalizations and ultimately the number of deaths. And so if COVID becomes endemic and like the flu, though worse because it's more deadly than the flu, we either lock down forever or eventually we have to open up and accept that unfortunately some people will get sick, and unfortunately there will be some people that die. I mean, we do that with the flu. The average number of flu deaths per year over the last 5 years has been 600 to 700 in Australia. Yet we don't shut down because of the flu. I'm saying that COVID is like the flu. It's very, very different. But ultimately we'll have to have a choice. Do we live with COVID or do we shut ourselves off from the rest of the world? that will become a very difficult. That's a very difficult choice and political. A lot of discussion around that will have to go on over the next 6 months, I suppose, as we move to having vaccination levels that allow us to at least think about those choices.
Yeah, that's right. Dan, I know there are some export awards coming up.
Yes.
I'd like to share what those awards are, who the eligible people are, what businesses, etc.
Certainly. The Australian government, let me start at the top and work down. The Australian government has for 59 years been running export awards, and it's some of the exporters that have won those awards are household names, companies that we all know. And just going back to opening up the border, there's a number of companies. There's a top architectural company that builds stadiums around the world, had a great input in the London Olympic Stadium, the Beijing Stadium, all around the world. Now they can do selling online. They can do their architectural work online. But as was pointed out to me many times by the head of the organisation, an Australian company which has 171 architects in their office, obviously working remotely at the moment, but they can work remotely. The issue is they need to sit in front of governments to get work. At that level, when we're talking the level of a stadium like the Beijing Olympic Stadium or other stadiums in Australia, for instance, you need to sit in front of someone, in front of governments and actually sell what your ideas are. For them not to be able to travel, for other businesses not to be able to travel, it's very, very difficult. And we can do virtual meetings forever, but at the end of the day, we all enjoy and want that face-to-face. So I agree that we need to be safe and sound in Australia, but the quicker we can come up with the point when we can open the border, economically, we have to do that. We have to do that. It's we just need to come to the point where it's safe to do that, and also tie that up against economics as well. But taking that aside, the Export Awards are 59 years young this year, and last year the Australian government decided to do a Resilient Award. So that meant companies that were working their way through the COVID situation and how they were managing that. And there was one particular company there were 8 companies that were chosen Australia-wide for each state and territory. And there was one particular one for New South Wales that's a regional-based manufacturing facility that kept their 60, did not have one order on their book for export or domestic. They are a production line manufacturing company. They build production line for the food industry. Production lines for the food industry. They had 60 staff down in a regional town. They kept the 60 staff on and they paid that 60 staff. They kept them in employment. They did odd work domestically for the township and surrounding areas. And then when the end of the year came, they got an influx of orders from overseas, and they're now getting through all of these orders and doing quite well. Their biggest problem is the logistics and trying to get all the equipment back over to where it's got to go. One of their problems is that they need to travel to these production lines are worth millions and millions of dollars, and they need to travel to commission them, to install them, and to train the people that they're selling to. So they ended up with iPad training and things like that, which I think a lot of companies ended up doing. This year, the Australian government has gone back to the normal export awards, not a Resilient Award. And we have found that exporters, some of the stories that they're doing, we manage that on behalf of a number of state governments, and the winners of each state government level will go to the national in November. We're finding wonderful, heartwarming stories of exporters. It doesn't matter how big or small you are. It's about the story, and it's a recognition. It's a celebration. I'm not quite sure how we're going to celebrate in New South Wales at the moment when the awards are actually announced in September, but we'll think of a way to celebrate, because it's important to continue to support exporters. Very important.
Of course, that's a lifeline of Australian economy. Yeah, as you said, we got limited population and we got all the world to explore. And Dianne, we can promote these awards in our audience, in our SIPBN members as well. Please feel free to send any material.
Thank you.
To circulate.
I won't send any material because the portal closes on Fridays.
All right.
I will encourage everyone to think about 2022, and it's the 60th awards, 60th year, and it'll be a great celebration. And I will send something out to you then. And please, everyone, please consider it's if you know anyone that would be worthy of recommending it to. Thank you.
Yes. Yeah. Are there any questions from the audience?
Raman, can I ask a question, please?
Yeah, sure.
Yes, okay. This is a Bhalla. I am actually founder, president of Australia-India Chamber of Commerce, which is known as Australia-India Business Council now. And I'm dealing from last 30 years in international marketing, especially in the industrial engineering products. Now this EMDG grant, what you're talking about, which is changing as per you on 16th of August or something like that, how friendly it is for the small businesses? Because what we find that all the time our state grants were planned for basically large groups, large companies, or upper medium class companies, where the small scale industry, whether it is a manufacturing unit, whether it's small businesses, virtually has been ignored. I don't see a single incidence or single exhibition by our states supporting the small scale industries. So how, as a chair of the Export Council of Australia, you would like to take this and put up on the board? What should be done?
I understand what you're saying. The particular new grant has a limit of, and it sounds a lot of money, but it has a limit of a company able to apply if they earn less than $20 million. Okay, and that's just not their export in total earnings. So it is geared towards new exporters and emerging exporters, ones that have only done a few things in their journey. I am very happy if you send me an email and I'll connect with you and give you some more advice on this. It's really comes down to what you're doing, what your business is doing, and whether it fits the criteria. It's not about the money. It's about the plan and what you want to do getting into export. And then building on that plan. That's the point. I keep going back to an export plan, and I'm sure David would agree, even if you're an investor in property, you need to have a plan to do that. So anything you do has to have a business plan. This is building on that business plan to be an export, to have an export plan. And if you can do that, then you're on the first step to be able to apply for the grant.
Yeah, I have a particular question, Dianne. What's Australian biotechnology industry's outlook from global perspective? Are we seeing any developments in the state?
I think that the technology area of anything, bio, if we start talking ag tech, fintech, biotech, health tech, services have got a great prospect going forward. And we're marvelous. I mean, I do appreciate the Afterpay is a fintech app, and look what they've done. We can do anything in Australia. We have the skills to do that. We need to keep those skills going. That's why we need to bring in skilled labour. We need to keep doing that and build our own capabilities. We need to train. We need to do better at school learning for girls and boys. We need to do all of those things. We need to build for the future. But biotech, there's a lot out there with biotech. And again, I can put people in touch, or Raman with you, I can put you in touch with a few biotech companies that are doing remarkable things internationally. Climate change is another, health and energy, clean energy and clean climate, if you like. Very, very important area for the future, and something that is very much I'm not going to say a booming, but something for exporters, if there's anything to do with that, to look at for the future.
Yeah. Thank you. Thank you. Any more questions from the audience?
There's one there about defence. Again, there's a lot of help in the defence area. If anyone is in that area as a small manufacturer or small service provider, there's a lot of assistance out there. The Department of Industry, the Federal Department of Industry, has some sectors that they're really concentrating on. Agriculture, advanced technology, defence is in all of that. And in fact, it's one of our export award categories. It's very, very important. Minerals and energy related industries and services. So when we talk about minerals and energy, we're actually talking also about the related services in minerals and energy. So, you know, the tech services. When we're talking health, we're talking about the related services like the biotechnology and the health tech services that go there. The same with ag. So everything we're doing now when we talk export includes the services component. And if you think about it, most goods that we export have a service component to it as well.
Yeah, for sure. Thank you. Any questions from the audience?
I would just like to say if anyone is interested in talking more about export, they're very happy to email me through yourself if you like. You know, there's lots of information out there. I think that this is the time to plan, even if it's just a little seed in your mind. This is the time to plan and be ready to really go when you can build up that opportunity to get going.
Do you have anything to add, David, from your perspective?
Just turning on my music, get off mute. No, I'm all good from me. So, so I mean, if people want to get access to ANZ research, then please reach out to their ANZ contact, and they can be set up for that. So.
If I may take the opportunity to summarize our discussion, very informed session we had, David, Dianne. If I may summarize, yes, currently it looks like GDP looks like in negative territory for the time being, 1 or 2 quarters, but the outlook looks strong, particularly going into the new year. So we might see some strong economic performance from the Australian economy, consumer perspective. Consumer spending could be strong going forward. And low interest rate environment looks like going to stay for a while we see increase in interest rates going down probably 2023, 24. But I'm not sure about the real interest rate. I'll leave that to experts, to David, to work that out. And Diane's point about, very interesting actually, the planning about your next move and what the product is, how the market is, and how you're going to tap that market with your product. It needs a strategic approach. You need to plan about your resources, what you have in hand, what the financing is required, and how you're going to tap that market. Maybe joint venture partner in any overseas market is very important. I've been working in this space more from investment point of view. We always try to find a local partner. So the role of local partner is very, very important from our perspective in any so far the experience we had. So if I could summarize the 3 key points from our discussion, unless someone else has any other point of view, feel free to share. On this note, I would like to thank our panelists for sharing their knowledge, the insights of the market and the global markets, and more importantly, our audience who've been kind enough to join us. And this was inaugural, so we'll have more sessions lined up and keep you posted. And don't forget, SIPBN is a premium platform. We plan to bring you more sessions, more information, and you should connect with us, and if possible, join us on the platform so that we can add value to whatever we're doing. Thank you so much. Thank you for your session. Thank you.
Thank you.
Thanks, everyone. Cheers.
Bye.
Yes, thank you.